Welcome back. I'm Pratap here. Today is 8th April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Apart from that, we will also discuss the 4 DIT trades. I have posted the DIT trade setup NeoStock software generated reports at our Telegram channel. So the high priority trade setup related stocks, 4 stocks are filtered. We will also discuss after completion of the HLQ zone performance evaluation. And from those 4 stocks, SBI card gave you a perfect trade with 1:5 RR achieved today. That we will discuss. Even before that, all of you please note, we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. Here you have all the training lessons are available. Just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions provided at our Telegram channel. I provided the link to the Telegram channel in this video description. So join at our Telegram channel. At the top of the Telegram channel window, you can find all the training instructions. There is a pinned message. If you go to the pinned messages, you can find all the training instructions. So learn this course according to those training instructions. Then it will be helpful to you and you will become a very good independent trader in the coming months. So please make use of this opportunity. Okay, now let's get into the evaluation of performance evaluation of the high liquidity zones. So we got 10 high liquidity zones and one trade. You would have got a very successful trade. But what happened in the trade, let us discuss, because that is a very important learning for us today. And that is a power grid. Power grid is a daily high liquidity supply zone. Actually, this stock is near daily high liquidity supply zone, but it is moving between daily high liquidity demand zone and as well as daily high liquidity supply zone. That means you get trade opportunities either side. And this is the one already we fine-tuned earlier. I have already explained how we fine-tuned. But today, trade we got in the demand zone, that too in the dynamic zone. What is a dynamic zone? The zone is created in today live market. So let's go to the 75 minutes time frame. Here already we have drawn the 75 minutes rally, 1, 2, 3, 4 base candles and a rally candle. I think in the previous class I have explained, 2 sessions before. Okay, because previously this zone gave a trade. From here again sharply it moved up from this demand zone. After that again prices came down to this 75 minute zone. In this 75 minute zone, a new 15 minute zone is created when on Monday. So here inside the fine-tuned 75 minute zone, on Monday it created a drop base rally. Actually today prices entered into the zone at 10:45 candle. After that it moved. Once again it gave you. But if you look into this drop base rally, 5 minute structure is not very clear. Here 5 minutes. If you would have considered this as a failed ERC rally candle, maybe you might have drawn drop base rally. That way you might have taken a trade in this candle at 10:45. If anybody drawn like this. But I am not fully convinced with this. This is a leg out candle. So that's why I didn't plan anything. But today, you know what happened? At 10:40, again within this 15-minute zone, a 5-minute zone is created. Drop base rally. And this is the area we can plan in the next retracement. And the same next retracement happened again today itself. See, after that, prices entered into this fine-tuned 5-minute zone, and see how sharply prices moved. And here we have a 15 minutes supply zone. It reached the 15-minute supply zone. Drop base drop. See, it gave an entry here in both these candles. It gave an entry in this zone, and after that it reached the 15 minutes supply zone. When you got the entry? You got the entry in this candle at 11:40. When it reached the target at 12:10, it reached. But unfortunately, we can't take this trade. At what is the type 2 proximal? Type 2 proximal entry is 285.55 paisa. 285.50 paisa you can't take. Where you have to take entry? You have to take 285.45 paisa. 10 paisa difference. Why 10 paisa difference? Just because of the 10 paisa, the risk went beyond 2%. See, from this entry and the target, it went beyond. If you're taking this 255 paisa, instead of that, if you are taking the trade at 285.45 paisa, 10 paisa below, inside the zone, 10 paisa inside the zone, now risk will be managed up to 2%. 1.97% something it is coming, it is almost 2%. But if you add that extra 10 paisa, risk is going beyond 2%, maybe 2.1% something, or 2.08 or 09, or close to 2.1% risk we are getting. So that is the reason why adjusted the entry in such a way. If you take your entry at 285.45 paisa, your risk will be managed up to 2%, because maximum acceptable risk is 2%. But you know what happened today? When prices reached, it got an entry at type 2 proximal, that is 284.55 paisa. See the low of this candle, 284.55, 285, sorry, low, 285.55 paisa. Low of the second candle, this candle also, that is also 285.55 paisa. But what is our entry? 284.45 paisa. That means with the 10 paisa difference, we miss the trade. And after that, see how sharply it moved and reached the target. Just because of our risk management, we narrowly missed the trade. But you have to accept that. It looks like we missed a very good trade today. But what to do? We have to accept. See, it gave you 1:3.57%, or it has given till this 15 minutes target zone. So this is a very bad luck for our trade point of view, because the risk is a little higher. Slightly we miss the trade. This is a great opportunity today we got, but we missed it with 10 paisa difference, mainly because of the risk management. Risk is beyond 2%, slightly beyond 2%. After keeping the stop buffer or the ATR 3% ATR value, whatever our software suggested, that value, we missed. After adding that buffer, our trade is getting beyond 2%. Okay, anyway, the fine-tuned area, prices did not reach, that way we missed the trade. This is about power grid. And the next one, another bad luck, PEL. PEL is also a daily high liquidity zone. This is the zone identified by our software. Rally candle, 1, 2, 3, 4 base candles and a drop candle. See, this is the daily zone we have. Already this is a LOTL zone to another daily zone. Previously we have drawn this rally 1, 2, 3, 4 base candles and drop candle. This itself is a high liquidity zone. Now another high liquidity zone is created, which is LOTL zone to the previous high liquidity zone. So our software suggested this is the one, rally, 4 base candles and a drop candle. And this one is fine tuned with 75 minutes time frame. Here in the 75 we have a rally, base, drop. I know I agree this drop candle is not very great because of this large candle. The candle sizes are not really looking very promising, but okay. See, the imbalance took place in this candle. That's why this 75 minute zone, okay. And also there is one more 75, rally, base, drop. Now fine tune these 75 minute zones with 15 minute zones. Here you have a rally, base, drop and follow through candles, the 15 minute zone. Here also you have a rally, 2 base candles and a drop candle. Again fine tune these 15 minute zones with 5 minutes time frame. Here you see perfect zone, rally, base, drop. And here also you don't have proper 5 minute structure. See here, all are base candles. Rally 1, 2, 3, 4, 5, 6, 7. That's why I'm not comfortable. Again, this is also medium size candle. I can't say this is, maybe it could be a base candle. But somehow I'm not comfortable with this structure. Lot of consolidation took place. There are higher chances this might be violated. But today, see, today we got a trade. Perfect today. Prices entered and sharply it came down. But why we didn't consider this trade? The reason is this entry is at morning 9:15, 1 minute candle we got the entry. 9:15, 1 minute candle, we don't take the trades. So go to the 1 minute time frame. See when we got the trade? Morning 9:15, 1 minute candle. That way you will be missing this trade. See, the rules are very strict. 9:15, no trades at all. Because many times 9:15, see yesterday you have seen, all trades are stopped out at 9:15 candle. Today also you will see. Very soon you will see today also, majority of our high liquidity zones are gone at 9:15 candle itself. Today, even today. But yesterday all demand zones are gone at 9:15 candle. Today all supply zones are gone. Okay, because PEL is a 9:15 candle, we don't consider this trade. And next one is a Union Bank. This is a 75 minutes high liquidity zone. How our software identified? Drop, base, drop with a hidden body. You get drop, base, drop. Okay, this one is fine tuned with 15 minutes time frame. We have a rally, base, drop. This is a 15 minute zone. This is again fine tuned with 5 minutes time frame. Look into the 5 minutes time frame. Here you have a rally, 1, 2, 3, 4 base candles and again a drop candle. And today we got a trade and then sharply prices came down, right? Looks like we got a good profit. No. Even this candle also, the trade is at morning 9:15 candle. In fact, this zone reached the distal line and then sharply came down. Go to 1 minute time frame, you get clarity. See, this is morning 9:15 candle. Prices entered, I think it is slightly pierced maybe by 5 paisa something. What is the high of this zone? The high of this zone is 122.55 paisa. And what is the high of the candle? 122.56 paisa, 1 paisa. So that means this zone is pierced. It is no more valid. But okay, trade point of view, sharply after that prices came down. It will be within the stop buffer. When it is within the stop buffer, definitely you get a huge profit. But we can't consider the trade because it is a morning 9:15 1 minute candle. If it is in the next candle, we would have considered the trade, but not on this candle. So that way 2 trades gone. And the remaining stocks, what about remaining stocks? Remaining stocks, they are all gone at morning 9:15 candle. See, these two, it looks like we missed trades. But similarly, remaining trades, remaining stocks, we missed the stop losses. We missed the stopped out trades because they all happened in 9:15. We don't take trades. Everything is gone at 9:15 candle. Maybe institutions created the zones and they might have removed the institutional order flows from those zones. That's why they're all gone today easily. And moreover, all these zones are created on 4th. Whatever the zones created on 4th, majority of the zones are gone. Okay, anyway, let us look into the high liquidity zones remaining one by one quickly. And after that, we will look into DIT trades. Okay, what is the first one? PEL. PEL is a daily high liquidity supply zone. PEL already we discussed because 9:15 candle we didn't take the trade. Power grid also we discussed, just 10 paisa we missed the trade. Actually, this is the stock is near the supply zone, daily supply zone, but it is also having demand zone, high liquidity. Either side we can plan the trades. This is the one advantage. When you have both demand and supply zones are high liquidity zones at daily or 75 minutes time frame, you get the trade opportunities on either side. But otherwise, if both are not high liquidity zone, if stock is near demand zones, you have to take only demand zones. You should not look into supply zones. Similarly, if the stocks are near this high liquidity supply zones, you should look into only supply zones. You should not look into demand zones. If both are demand and supply zones, then either side you can plan the trade. So always remember, I clearly explained these points in lesson 21.3 video. Okay, and these are the 2 daily zones. Remaining all are, we got 8 75-minute zones. Let us see, I think almost all the zones are gone today. See, this is the first one, 75-minute zone. This is gone, right? This is a drop-based drop. This is gone. When it is gone, morning 9:15, 1 minute candle. See, morning 9:15, 1 minute candle, the zone is gone. So that means we can't take a trade in this zone. See how 9:15 candle saved earlier. It looks like we missed good trades in 9:15. Now, the same 9:15 candle saved our stopped out trades today. If 9:15 zone is violated, we don't plan any trades in that zone. That's it. See, this is morning 9:15, 1 minute candle. Okay, next one is Crompton. Crompton is 75 minutes high liquidity zone. See, Crompton also same thing happened. We have a LTF zone. Crompton is having a LTF, lower time frame zone origin. See, rally base drop. This is the origin. So it gave you a trade from the origin. After that, prices came down. So within the origin, we have a fine-tuned 5-minute zone. Drop base drop. Prices went beyond that. But still, you can't take this trade. Maybe it could have been stopped out. Or maybe within the stop buffer, whatever it is. You can't take this trade. Go to 1 minute, you will understand why. So everything happened in morning 9:15, 1 minute candle. See, this is 9:15, 1 minute candle. Next stock IEX. IEX is also same, but IEX zone itself is not good. And we know the zone will be violated. See, we don't have a fine-tuned 5-minute zone here. Rally, 3 base candles and a drop with hidden body here. And it is having a 15-minute zone, rally base drop. Actually, this candle itself, I am not really fully comfortable, not comfortable. This is looking like a medium-sized candle. medium size leg candle. You should not use a medium size leg candle in the base if there are no earlier base candles. If there are earlier base candles, medium size leg candle you can keep before the leg out. But first candle itself is a medium size, you can't keep. But still I have drawn. Just I want to compromise and draw and see any 5-minute structures are there. See, 5-minute structure is not at all proper. See here, you have a rally, base, rally. So again, drop candle in between. Because of this candle, it looks like a smaller. The moment you hide, you will understand. So this is a rally, base and rally. So rally candle, here drop candle with hidden body, and in between no base candles. Such kind of zones will be violated easily. That is what happened in the morning 9:15, 1-minute candle. Let me go to 1-minute time frame. Oh, sorry, this is not violated, a 9:16 candle. 9:16 candle it is violated. 9:15 it is within the zone. But anyway, there is no proper 5-minute structure. We can't plan any trade and the zone is also gone after that. PR stunt came down. Why PR stunt came down? Maybe above that there could be some traps might be available that pushed the prices down. Okay, next one is Indus Towers. See, Indus Towers also, the zone is gone in the morning 9:15 candle. Have you noticed? This is the one, 9:15. First of all, how we have identified the zone? The 75 minutes software identified this as a drop candle. This is the drop, 3 base candles and a drop candle. Sorry, not this one. This is the one. Drop, 2 base candles and a drop with hidden body. Drop, base, drop. And this one we fine tuned with 15 minutes time frame. Here drop, 2 base candles and a drop. But within this I didn't draw any fine tuned zone. That means the order flow is not good here. Let me hide, you will understand. Because of the gap, all are looking like base candles. Actually, that is not the case. See here. Look into this candle. That is a failed ERC candle. These are the base candles. See, this is a very large candle. Failed ERC. You have a failed ERC. After that, you have a drop candle with hidden body. In between no base candle, such kind of zones will be violated easily. But here you have a drop, 2 base candles and a drop. The 5-minute zone. This is the horizon for this entire 75-minute zone. Generally, these horizons will be having a strong institutional order flow. But not the case today. So morning 9:15 candle itself, 1-minute candle, this is gone. That's why we didn't plan a trade. Otherwise, our trade would have been stopped out today. Because of the morning 9:15 candle, it saved our stopped out trades. See, earlier we missed the trades. Now it is saving our stopped out trades because of 9:15 candles. See, with the gap ups, prices are going beyond the zone. And the next one is a polycab. This is a 75 minutes high liquidity zone. See, this is also gone. In the morning 9:15, 1-minute candle, but currently this is 75 minutes time frame. Let us go to 1 minute later. First, I will explain how our software identified. This is a drop, 1, 2, 3, 4 base candles and drop. This is how our software identified. This one is fine-tuned with 15 minutes time frame. Rally, base, drop. This is again having fine-tuned 5-minute zone. Again rally, 2 base candles and a drop candle. But this zone is gone in morning 9:15, 1-minute candle. Go to the 1 minute. See, in the 1 minute chart, morning 9:15, 1 minute, the zone is gone. Maybe above the zone there could be some traps might be there that again pushed the market down. Might have given you some good intraday profit, but we can't take a trade because that itself in the 9:15 1 minute candle. Next one is Poonawalla. This is also 75 minutes high liquidity supply zone. Look into this zone. This is also gone in the morning 9:15 1 minute. But anyway, this zone structure itself is not good at 5 minutes time frame. First of all, how our software identified as a drop, one base candle drop with hidden body. Go to 15 minutes time frame. We have a rally base drop with hidden body. Go to 5 minutes. 5 minutes, you see, if you hide all these gap related candles, then you understand. You have a drop, two base candles and a rally candle. So large candle this is. So that is the reason why such kind of zones will be violated easily. Anyway, even if it is having a fine-tuned 5-minute zone also, we can't plan because in the morning 9:15 1 minute candle, this zone is gone. See, this is morning 9:15 1 minute candle. Next one is Union Bank. This already we discussed. We got actually good profit, supposed to get a profit, but we didn't get the trade because it is a morning 9:15 candle. We didn't take any trade. And the last one is United Spirits. This is a 75 minutes high liquidity zone. Rally based drop, but here I didn't fine tune. 15 minutes structure is not very convincing here. I'm not convinced here. Drop 1, 2, 3, 4, 5, 6, 7, 8. 7 base candles and then drop candle. So that's why I didn't show any interest on this. Maybe some of you may feel if I would have drawn this as a drop candle, 3 base candles within this area, I could have drawn a zone. Some of you maybe, I don't know, maybe you might have written a zone like this. Then if you go to 5 minutes time frame, in the 5 minutes time frame, maybe rally base drop with hidden body. You might have thought it would have given you a good profit, good RR it might have given you. But go to 1 minute time frame, you would have got a trade in 9:16 candle. See, 9:16 candle, you would have got a trade till this gap area. If you book, what could have been the RR you would have got till this gap area? Generally, when gaps are there, that is the target. Maybe this could be your entry. Maybe this somewhere here, it could be your stop loss. You would have got 1:4.48 RR you would have achieved. Looks like excellent, right? But, okay, all these kind of things we do after we complete the trade. But in practically, while analyzing the charts, see clearly in the 15 minutes time frame, this can't be a leg-in because this is also a base candle. This is 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 a base. You have 7 base candles. 1, 2, 3, 4, 5, 6, 7 base candles. Drop 7 base candles and a drop. Maximum we accept 6. Maybe today it worked, but it won't happen every time. Maybe somebody might have compromised and might have drawn this as a drop, 3 base candles. Maybe you would have got a trade here. But I am not convinced with that analysis. This is clearly a base candle. So this is a good leg-in candle. This is a leg-in, 7 base candles and drop. Because 7 base candles, we did not consider this zone. Looks like you would have got a good trade at 9:16 candle. But we can't accept this zone. So that's why. See, after that, see, the zone is violated, right? because of this structure. Maybe morning volatility is very high, sharply it reached up to this gap area. It looks like it gave you the trade in just 10 or 15 minutes time period. But after that the zone is gone, because here 7 base candles means mostly majority, at least 90 or 95% scenarios, the zones will be violated. So this is the reason why we didn't get any HLQ zone trades today. The only one, the power grid, not PEL or power grid, power grid. Power grid is very bad luck for us. Just 10 paisa, just because of the risk management point of view. 10 paisa inside you fine tuned. With that 10 paisa, price did not reach and missed the trade. Otherwise, it could have been a good trade for us. Okay, so this is about HLQ zones. Apart from these HLQ zones, because I made a mistake while generating our premium reports yesterday, DIT, wrongly I have selected demand zone for a bearish trade setup. I selected demand zone instead of supply zone. So one of our members sent a message to my team members, and then I generated and I posted at our Telegram channel. The last report, if you look into that at our Telegram channel, so that is LTF, ITF, HTF supply zone confluence, and also the HTF supply zone having HTF EMA confluence. That is a high probability trade setup as you land in lesson 28. Lesson 28 I explained those high probability trade setup, how to identify. High probability means they have higher chances of getting. It doesn't mean, see, it's a probability game. Sometimes probabilities also will fail. But majority of the times, these high probability trade setups, they are giving good success for us. There are times they will also violate when overall market situation is not good. But remaining situation, they are giving good profits. Today also, SBI card gave us a very perfect trade. That is a perfect, no question at all. So if you look into that, the last report at our Telegram channel, that is the most filtered. We filtered. See, we got nearly 75 stocks. We got bearish trade setup for daily income trade. Generally, we get some 10 or 15 maximum. But yesterday, because of the huge volatility changes in the market, we got 76 bearish trade setup stocks are filtered. I am sure many of them would have been stopped out today. But the high probability one, SBI card gave you a perfect trade today. Moreover, it is a high liquidity zone also, 15 minutes high liquidity zone. Now we are in the 15 minutes time frame. What is that zone identified? This is on 4th April 2025 at 15 hours is the leg-in, rally, base and drop. Rally, base, drop. The 15-minute zone. But 15-minute zone should have a fine-tuned 5-minute zone. Otherwise, if the fine-tuned 5-minute zone is not there, there are higher chances zone will be violated. So that's why you should look into 5 minutes time frame. In the 5 minutes time frame, we have a rally, 1, 2, 3 base candles and a medium size candle. See here you have that means the entire 15-minute zone is also same as a 5-minute zone. See, the 15-minute structure is almost same as 5-minute structure. But what I observed here, you see, rally, base, drop. This is the 5-minute zone. This is the origin for this 15-minute zone. This is the origin. So this origin, from this origin, you can plan our trade. See, 15-minute zone is the high liquidity zone. That 15 minutes high liquidity zone is having a 5 minutes origin. So probably this is the area. So instead of taking a trade here, you can take a trade here at this origin. So that way prices entered in the horizon today. See, prices are entered in the horizon. They are within the horizon. And when we got the trade, is it morning 9:15? No. It is that's why I told you it is a perfect trade, not 9:15 at all. And this is at 9:40 candle. 9:40, 5 minutes candle. After that, it achieved 1:5 RR. I know many of you will exit at 1:5 RR before reaching 15 minutes target zone. You have somewhere 15 minutes target is somewhere here. It will be somewhere here, but here some gap is also there. So that's why prices will be reaching into the gap area. Maybe some people may keep target at this gap area. Some people exit at 1:3. 1:5 is the perfect, because always I suggest all the freshers, previously also several times I suggested, even in our training videos also. If you are a fresher, if a stock achieved 1:5 before reaching your target, exit at 1:5 target zone. The other strategy is partially book a profit at 1:3 and remaining either in the target zone or 1:5 RR remaining you can book. That way also some safest way of doing the trading if you are in the initial stage. Today it would have given you a good profit. So I want to calculate what kind of profit it has given today, 1:5 during this video recording session, so that we all will understand that this is a DIT trade setup, daily income trade. It is not a HLQ zone. So daily DIT trades, generally you hold the stocks for 2 to 3 days time period until it reaches the target. But when volatility is very high in the market, it's waiting up to reaching the targets is not a good situation. Better to book the profit at either 1:3 or 1:5, or book partially at 1:3, or if it reached the target zone, book the profit, remaining profit, or if it did not reach the target zone, but again 1:5 achieved, better you exit and close positions at 1:5 RR. Suppose if you would have taken a trade in this stock and exited at 1:5 RR, what is the profit you would have got? So what is the entry? 848 is your entry. That is the 5 minutes lower time frame zone horizon, that is the entry. And what is your profit? Till 1:5 RR, the profit is till 1:5 RR only. I have drawn this short position tool. See, RR is 1:5. So till what is the profit? 832.10 you have to exit after reaching 1:3 RR. So it gave you 15.9 rupees profit on each share. But if you would have gone for a short in futures, what could be your profit? That we will calculate. So this is SBI card, right? Let me copy. Let me open zero the horizon calculator. Our stock is SBI card. Taking April futures, I am selecting. 800 is the net quantity. So 15.9 into 800, that is the lot size. You would have got 12,720 rupees profit within one day itself. And what could be the ROI? That also we will calculate. 1,20,000, that is at the closing price, because now market is over. At the closing price, this is the margin cost. But what is the current closing price? Current closing price is almost where we took the entry. That means there won't be much difference in the price. Maybe some 20 or 30 rupees difference might be there. That is okay, negligible. So let me take the margin cost as 1,20,600 rupees. Round value I will take. So this is the profit. How do you calculate ROI? Or profit into 100 divided by the margin cost. That is 1,20,600 rupees. You would have got 10.5% ROI. And when you got the trade, the time also we will calculate. You got the trade. Let me go to 5 minutes time frame. Or let me go to 1 minute. That is much perfect. You got the trade in this candle. 940 candle you got. And when it reached the target in this candle, this is the candle you will exit. This is at 10 o'clock 2 minutes. This is 940. That means in 22 minutes, your trade is completed. In 22 minutes, you might have got 10.5% ROI you would have got. Return on the investment. And moreover, this zone is available to everybody at our Telegram channel. It's supposed to be in the premium video because I made a mistake. And recording the video and all is not possible at the midnight. So immediately I just took the screenshots. Okay, let everybody get benefit. Nothing wrong. That is the way I thought. Because the paid people should not get suffered because of the mistake I made. So you would have got a profit, good profit. There is one more stopped out trade is also there. Out of the 4 stocks, ICICI Prudential. This is also a 75 minutes. If anybody would have taken a trade, your trade would have been stopped out. A minimal loss you would have got. That is okay. But anything, it is a stopped out. How our software identified the 15-minute zone. This is a drop. 1, 2, 3 base candles and a drop candle with hidden body. Drop base drop. And go to 5 minutes time frame. In the 5 minutes time frame, this structure is not good. Why? Look into this. This is a failed ERC candle. You hide this gap, then you will understand. See here. Now look into this candle. See, this is a base candle. This is a medium size candle. See, this is a large candle. Because of the gap, see, whenever there are gaps, scale will be adjusted. When scale is adjusted, candles looks like small candles. That is the biggest problem with the gaps on the charts. So that's why hide the gap and see, then you will understand the real structure of all these candles. This is a failed ERC candle. And then you have another ERC candle, drop candle. Failed ERC and ERC. So failed ERC you can't use as a base candle. You can use it as a leg-in. Assume this is a leg-in. This is the leg out. In between there are no base candles. Many times what will happen? Such kind of zones will be violated. But here, rally base drop, this is the origin for this 15 minutes bearish trade setup supply zone. This is the origin. Rally base drop. From this origin it picked up. Even see earlier also this origin, how it pushed the market down. Now also you see it picked up the orders and entire 15-minute zones are. Many times these origins are giving us a very good profits. But today it is stopped out. Bad luck. That is okay. So what could have been the loss we would have got? This is a 550. In case if anybody would have taken a trade, how much loss you would have got? Let us calculate. 558.5. Sorry. 559.15 minus 550 8.5065, maybe another 25 paisa, maybe or 20 or 25 paisa stop buffer will be there. Previously we have seen the trade we missed. What is the cost of that stock? Here its cost is around 288. Here we have 25 paisa. Approximately I am calculating. Maybe another maybe 35 paisa or 35 paisa. So let me add 35 approximately, could be the stop buffer. Not more than that, something around that only. So if we add, total value is going to be 1 plus 35 equals to 1. So total risk is 1 rupee risk. So what is the cost of ICICI Prudential? What is the margin cost and also lot size? Let us check. ICICI Prudential APR future 750 is the lot size. So 1 into 750, so 750 rupees is your stop loss. But here see the margin cost is very less. That way your ROI might be more. Let us check. So into 100 divided by 74,712. But this is the closing time, market closing time, this is the margin. But before, where we have taken our entry at the time, what is the value that we have to see. Here you would have taken a trade. Where is the current closing price? Here. So when prices are moving up from the current margin, the value could be a little higher. Of course, it is very close, but even then, the margin cost could be maybe 74,750 rupees. ₹74,750. You got 1%. 1% loss you would have got on this stock. But the other stock you got 10.5%. Even if you still deduct 9.5%, your overall profit, if you would have taken both the stocks, trades from both the stocks. First of all, when we got the entry in this stock, you got the entry at 1345. At 1345, you would have taken the entry. But before that, you would have completed this SBI card. SBI card trade, when you got SBI card trade at 940. At 940 we got. So there is no question of missing this trade. Especially, I am talking about DIT traders. Even if you say, I did not take ICICI Prudential, maybe at least some convincing reason will be there. Because it is at 1 o'clock. But morning, you should not miss your trade. Because the main advantage the morning trades is profits you get in a short period. Because volatility is high in the market. When volatility is high, everything within a short period, whether you get the loss within a short period, whether you get the profit within a short period, you will get. What is the advantage? Whether it is stopped out or whether it is profit, within a short period, you book the profit and your money will be released, and that money you will be using for some other stocks. So that means your money won't struck up even if it is stopped out. So that's why morning trades we should not miss. Okay, what about the remaining two? NBCC is not having a proper 5-minute structure. This is also a 15-minute zone. It is not about structure. This is about morning 9:15 candle. Sorry for my mistake. Why we didn't take is, this is a morning 9:15 1 minute candle trade. I know it is a DIT trade. Even it is DIT trade, morning 9:15 1 minute candle, taking trade in the before market start is risky. You may say, okay, I am using GTT, I am taking GTT orders, I am placing. I will manage, even if it hit the additional stop loss, I will manage. And if you think like that, and if you kept a GTT trade, and if your trade would have been executed, that is before pre-market itself you kept the trade, and your trade would have been executed, and you would have got again another good profit in NBCC. But that is not advisable, especially when market situation is having a high volatility. What you are seeing yesterday, you have seen, today you have seen, not only yesterday, today, these last 3-4 months you've been seeing the volatility in the market. All of a sudden with the 200, 300 points gap up market will start. And you have such a huge volatility in the market, going for GTT trades is not good. That is, GTT trades are nothing but placing the trades well in advance, including your stop loss, your target, everything you will fix in that window. If your broker is supporting GTT trades, you will fix everything and you will submit. And whenever price reaches, it will execute. If you keep such kind of trade today, your DIT trade, NBCC would have been executed and you would have got a good profit. It might have given you a very huge. See, almost it reached the 15 minutes target up to here. This zone. After that again started moving up and finally it is violated today. But before that it gave you a profit. But we can't take a trade because it happened in the morning. First of all, how we fine tune, go to the 5 minutes time frame. In the 5 minutes, in the recent time, earlier the structure is not good, 5 minute, but recently this zone was tested. At that time, it created a new order flow here. See, the candle is not good, right? 5 minutes candle. How I have drawn the zone? You may ask. I went to 3 minutes time frame because 5 minutes is not really clear to me. So what I did, I went to 3 minutes. 3 minutes, rally, base, drop, medium size candle, rally, medium size candle, base, and then a drop candle. See, today, exactly from the fine-tuned area, it came down. But if you go to 1 minute time frame, the trade that happened is in morning 9:15, 1 minute candle. Of course, intraday trades we don't take. But this is a DIT trade. You may exit if it reaches if you receive your target today, you may exit today itself. Otherwise, you will hold 2 or 3 days. This is how you play with the DIT trades. But anyway, I am not considering this trade. And the last one is the TI India, fourth one. TI India, today price did not reach. This is also 15-minute zone. Our software identified this as a rally base drop 15-minute zone. When I want to fine tune this with 5 minutes time frame, the structure is not good. See? We have a rally, 2 base candles, and again a rally candle. Such kind of structures, many times it will be violated. But why I went to 3 minutes is, see here you have a drop candle, you have another drop candle. Between 2 drop candles, higher wick and lower wicks, there will be many times strong institutional order flows will be there. I told you another way of drawing supply demand zones. We use institutional imbalances. There are other people, what they do, they draw zones by taking the lower wick of this candle and higher wick of this candle. I clearly explained this concept in one of the HLQ analysis videos earlier. They draw the zone. But if you go to, according to our concept, if you go 1 time frame below, exactly in that area, you may find a zone according to our supply demand zone concepts. Such kind of zone, strong order flows will be there. Now what I did, I went to 3 minutes. 3 minutes, you see. Excellent, drop base drop. Clearly structure is defined, and this drop base drop 3 minutes zone is acting as a lower time frame zone horizon to this entire 15-minute zone. 15-minute zone is a high liquidity zone. So that's why this is the area we can plan. Same thing we did for ICICI Prudential also, but only problem is ICICI Prudential is stopped out. See, from here it picked up the orders. From here it picked up the orders, and then the zone formation is completed. Which one? 15-minute zone. That's why here we can plan a trade. But today price did not enter into the zone at all today. So these are the 4 DIT trades what I published at our group. SBI card, I am sure all DIT traders would have taken this trade today, and you would have got a good profit. So this is about our analysis. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.